quickly before we go, I also
Sure.
want to touch on Zoom, because this is one of those more software-focused companies that
Yep.
we did see go public this year. So what are your thoughts on that when you compare it to more of like a Peloton that's a hardware company?
Yeah, I think investors can understand it a lot more easily. It's a business with 75% plus gross margins. That translates to a very different operating margin
Right.
picture. Your ceiling on profits, is your gross margin. If you lose 50% of your revenue for the cost of producing your good or your service, you're obviously starting yourself at a much lower level. So I think that folks understand that the high gross margins translate to a much clearer path to profitability, and businesses then can take advantage sort of at the operating expense level of more initiatives to boost operating leverage. They can cut sales and marketing, things like that. But your cost of goods, what it costs to create your software, your product, or your good, that's a lot harder to change. And that's why I think a company like Zoom or other software or SaaS businesses have been performing relatively robustly compared to other types of businesses with just very different margin profiles.
Yeah, that's right. And obviously with the profitability here, that's a good sign. But even with the brighter fundamental picture here with Zoom and other software companies, seeing broadly, I think a lot of these IPOs pulling back, even Beyond Meat after a huge run, that has come well off its highs. Do you think that kind of action broadly in the IPO market puts a bit of a damper when it comes to other unicorns looking to go public?
Yeah, I think so. I to a certain extent, I think if you're a smaller business, you might be a little bit more hesitant now. There also are, of course, sort of these macro trends,
Right.
geopolitical risks, political risks that investors are, pricing in, that issuers are pricing into their decisions. But I think if you are a large company, you are cash flow positive, and you have a strategic need or desire for an IPO, I don't think the sort of general pullback in some of these businesses that have been a little bit weaker post-IPO is going to matter too much. The one company that comes to mind really is Airbnb. It's a $30 billion plus company. Also, I think founded in 2009. We're over a decade old at this point, but we know it's a EBITDA positive business. It's a highly scalable business. There are certainly strong network effects associated with building out the Airbnb platform globally, and sort of no matter where you're traveling to, it's probably the first resource you're going to consult, other than maybe a hotel or something like that. So, that is an example of a company that I think is going to, pursue its public debut. In these conditions, it's possible something massive derails them, but right now that's a business that I would feel very confident in IPOing, in the next 6 to 12 months.